Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live with another live session with you all. And this time around, this session looms around the current market scenario and what are the threats that are there in this market that people need to be wary of, that people need to be aware of while they are investing in this market, especially those investors who are newly come into the market over the last 1 or 2 months and are wondering as to how the money could be made and what are the different facets of the markets, that why the markets are not going up at the moment. We'll discuss all those points. I'll answer your queries as well. So, hi Vino Gopal, very good morning. Let more people join in. It's a Sunday afternoon, Sunday morning, so hopefully I'll have more visitors coming in. Hopefully this will be a slightly longer session than the normal sessions we have. So hopefully this will be half an hour or more than that. And I would like more people to join in this, and let's discuss about the various facets of the market, various aspects of the market where we are probably hindered, and probably the reasons, those will be the reasons why the market is below 17,000 and not at new highs. So we'll discuss that. Virad, very happy Sunday to you as well. Morning, Mr. Ravi. So we'll discuss that. I hope your investment journey is going well. Your trading and investment, you're doing well in it. Yes, it has been a very difficult year up till now over the last 5 6 months, especially over the last 8 months. Things have not been so smooth as it has been for the last 2.5 years. But hopefully, things will only get better as we go along. So I'll tell you the reason. So I'll provide you the basic crux as to what are, in my opinion, the five biggest risks for the market, and what is the extent of the risk, whether it is at a peak or it is, you can say, increasing and could increase further going forward, or it is subsiding at the moment. So we'll discuss that. I hope you're able to hear me now clearly. I understand that my voice was low at that point of time. Hopefully now it is clear. Let me know. uh, so I'm not using a mic, I'm using the mic uh, of the laptop itself. So hopefully now things would be much better. So the thing is, we are in a midst of a correction in this market. The market has been going up. So let's go back in time. Let's say 2013. Since August of 2013, when the QE was announced, the market has been relentlessly going up. There have been corrections. There have been corrections in 2016 January, February. There have been corrections in 2018 till 20, and now we are facing another correction. So this is just a correction in a bull market which could end up in a bear phase, and that is a very big possibility. But overall, if you see overall over a period of 1 2 3 years, over 2 3 year period, this is a great opportunity to make big money, and I'll discuss that as to why I feel that way. But let's just discuss about the market a little bit for the next 2 3 minutes, and then I'll get to the major point of the discussion that we want to have for this session. So the market is around 16,500, 16,600. It tried to move up, but got sold off closer to 16,800. So what we are seeing is that we are in a 1,000 point band, and whenever the market breaches that band, either on the upside or on the downside, we go lower. So from 18,800 levels, 18,600 odd levels, you went to 17,800, then 16,800, and then 15,800. So there have been relentless selling in the stock. There have been relentless selling in the market, and it seems like that we are going to continue with this phase where the market would remain under pressure between 15,800 to 16,800 levels. We could go to the lower end of this decline towards 16,300, 400 as we go along. But when we look further, say 6 months, after 6 months down the line, then you would say that you could think that the market could behave much better going forward. So we could be in a scenario where the market could breach that once the inflationary pressure is understood by the market and is adjusted for. Once the rate hikes, couple of more rate hikes take place, we could breach that and move higher towards 17,700, 800 levels. So that is about the market. I think we'll be in this range of 16,200, 300 to 16,800 levels. And probably by end of the year, early next year, we could move much higher from these levels. Now, why I believe that, I'll discuss about the major pointers for this market, as to major pointers as to why I believe that the market could behave much better. So let's discuss those pointers at the moment. So there are about 5 points I have lined up here, which I would like to discuss with you. Uh, these are the threats to this market, and these are the reasons why the market has not been behaving that well. So there have been five threats to this market. One is the inflation. Topping out of the inflation is one of the reasons. See, I believe that the inflation might top out over the next 2 3 months. This is a major threat because a lot of, you can say, raw material prices linked to the inflationary pressure that we are seeing across the subcontinent, not only here in India, but across the subcontinent. Things are not looking that great. So, what we are witnessing at the moment is that uh, price consumer price index is extremely high, and prices of products that we use has gone up a lot. So what has happened is that due to that, the pressure on the pockets of individuals here in India has increased a lot, and that would correspond to less spending on items, less spending on products that normally people do buy. uh, so eventually what it corresponds to is that the consumer stocks will again get, I mean, those derated, because those consumer stocks have been trading at 60, 70, 100 times, and those will be derated in the due course of time, and that has happened. So something like a Nestle trading at 100 times, 120 times have come to 80 times. So basically valuations have come down. Now what we have to see is that whether the valuations have declined to a level where these inflationary pressures have been priced in or not. I believe that over the next 2 to 3 months, like by August, by end of August, early September, these should be priced in. So inflationary pressure for me started or began in February and has now probably peaking out. The inflation overall could peak out by end of the month, early next quarter, and probably the September quarter numbers would be very, you can say, would not be that encouraging for most of the companies, but then margins should expand, because if you see, inflationary pressures end up on the bottom line for the company, and the, you can say, the expenses get hurt, and the operating profit margins or the margins eventually get hurt, and that's why 90% of the companies have come out with very difficult margin scenario, where margins have dipped nearly 50% for some of the companies. So I think this could continue for one more quarter, and then things should look up from there on in. So that's the first point I wanted to make, and this was with relation to inflation. Second threat to the market is crude. Now crude was not a threat, say, about a month and a half back, when it was trading around 100 $110 per barrel. Now it has gone past $120 per barrel, and around 123 124 it looks like it could just spiral out of control and may go to 140. Now closely linked to the crude prices is probably the current Ukraine Russia scenario and the European scenario that we are facing. If that subsides a bit over the next 2 3 months, I have a feeling that could happen. Over the last many months, the fight has been going on. This has been a long lasting, you can say, war that is taking place in Europe, in the Russian region. So it has been about 3 months, more than 3 months, three and a half months. Hopefully things should get better over the next 2 3 months, and then I believe still that 130 $135 per barrel is the maximum that could go to. So we are on the cusp of not, we are not at the peak of the oil prices at the moment. Probably 1 month or maximum 6 8 weeks, 6 7 weeks more, and by six in the next 6 to 7 weeks, we'll see 130 $135 per barrel, 130 to 133, and then things should get better. So I think another move towards 15,700 is not ruled out because of this oil thing. But again, uh, similar to the inflationary point, the crude prices might peak out by August, end of August or so, or early September, by next quarter. And I think by that time there should be some sort of, we should be closer to some sort of a resolution with respect to the crisis in Ukraine, because by September we could be in by about 6 8 months into that war. So we have to consider that as a well. So that's the second biggest risk. If that doesn't happen and the crude really spirals and it goes beyond 150 $160 per barrel, then we are looking at even 14,700 for the Nifty. So basically why I'm pointing out these points is that uh, if these things do not get controlled, then we could be headed at least 1,000 point lower on the Nifty, 1,500 points lower. But what I feel about these 5 points, I'll explain in this presentation and let you know as to what could be the base case scenario for the market overall. The third in this list is the dollar rupee equation, or the dollar strength that we are seeing, and that is again closely linked to the crude prices. That is again closely linked to the economy in the US, which has been doing well, and that is why the inflation has gone up. And now the central banks are, you can say, increasing rates or hiking rates, etc. I think if the dollar rupee equation settles around 78 rupees to a dollar, that would be very fruitful for the market. But if it goes to 80 81 rupees to a dollar somewhere in the next 3 to 4 months, then we could be headed lower. But if it can control itself around 78 78 and a half, I think we could still be saved and we could move higher beyond 16,800, 17,000. Again, because of this dollar rupee equation, export oriented companies or sectors should continue to do well, because I don't see a lot of correction in the dollar index, or a lot of correction in this equation. Probably 75 74 and a half is maximum, what we can hope for in the best case scenario. But I think to just remain between 76 and 77 would be fine, and that is the base case scenario. And in that regard, even in that sense, if the dollar doesn't strengthen and the rupee doesn't weaken going forward in the next 3 to 4 months, things should look up, and that is what could be the base case scenario. That is what could be the probability. So out of these three scenarios, inflation could be peaking out, crude might head higher, so that is something we need to look for. But I think dollar thing could just stabilize if the government does a lot of things cleverly, which they are doing with respect to reducing the oil prices and many other things here in India. I think things could look good on the dollar rupee front. The fourth and the most important point out here is the central bank rate hikes that are taking place across the globe. Now, you have to understand that the British government, or the British Reserve Bank, have raised hikes. There have been raised hikes in US. India has done that once, and there will be at least a 50 basis point hike on the 4th of June. I think in the next 1 week or so. But there could be a 75 basis point. I don't know. But I think this is just the beginning of rate hikes across the world that we are witnessing. Now, this is something that is going to continue. We cannot avoid this. I think over the next 1 year or so, at least for the next 15 months, 12 to 15 months, we'll see consistent rate hikes from central banks, especially in US and Europe. In India, also by December, I think we could be looking at, by December or March, we could be looking at 6% on our interest rates, rather than 4.5% that we are at. So things could get worse. I think it is most probable it will. Now, whether the market has priced that in or not, that is what we have to see. So, this is one of the biggest risks out of the five, because the rate hikes will continue, companies will suffer, and the PE ratio will shrink for most of the company. And that is why high flying companies, which are trading at 100 times, 150, 200 times, which are trading at 200 times in October, are getting hammered, and they have gone down 40-50%. Now, whether that 50% correction is good enough or not, we'll only know in due course of time. And that is where probably we don't know whether that is the case. And that is where it hinges, that whether we'll go lower or not. What I feel is that if the rate hikes are very sharp, suppose there are 75 basis points hikes in here in India 2 3 times, then things could look extremely bad. 50 50 25 25 like that, if that happens by March, then things should be fine for the market may absorb that. So extreme hikes in India or abroad could end up seeing a scenario in which uh, the market could feel the heat and go down. Otherwise, the market may remain in this range and not go down further. Uh, Praveen, thanks for your contribution. Can I buy Kilpes for next 3 years? I think you can. At these levels, you can. There are a lot of triggers that are still to take place. We have been waiting for that for the last 1.5 years or so, which includes your NSC listing, your 3B Black Bio listing, your acquisition, primarily an acquisition that the company should do. It has around 120, 130 crores of cash. So you have to understand, a company that has a market cap of 260, 270 crores has around 120 crores of cash. It is virtually coming at 150 crores for you. A company coming at 150 crores doing sales of around 80, I think it will do around 70, 80 crores next year as well, minus pandemic. So I think these are good levels to buy. I still believe that the stock should trade closer to 900 even at current valuations. In 3 years time, you could see at least 900 to 1000, if not 2000 on the stock. So I'm very positive on it. Remember, I have my positions in the stock, and I have been having positions in the stock for the last 4 5 years. All right, coming back to my point. So basically, these are the four major, you can say, risks that I have mentioned with central bank rate hikes. So again, rate hikes are sharp, then market is set to go much lower. Rate hikes are smooth, then market will take it in its stride and move higher. And the final point here is the FII selling. Now, for me, out of these 5 points, this is the least effective at the moment, because there have been so much of FII selling. If I just look back since April of 2021, FIIs have been selling, and FII have sold from April 21 till June. I mean, even now they are selling for 13 14 months. They have sold, on an average they have sold 26,000 crore every month. And total selling has been close to 3 lakh 67,000 crore. That is a humongous number. uh, Even in comparison of what happened in 2008 9, or what happened during demonetization and during 2016 and so on and so forth, this is a big number. Even when the market mid and small cap declined between say 2018 to 2021, there it was not such big numbers coming through. And the only reason why the market has survived such kind of selling has been because of the buying through mutual funds, buying through fund houses, through the money of retailers, or retailers themselves buying naked stocks, or you can say domestic institutional investors buying big time. That is the only reason why the market has stayed afloat. I think FII selling will continue until this dollar rupee equation doesn't change, which it seems like will take at least 3 to 4 months, so at least 2 3 months more. One more quarter of heavy selling is pretty much possible the way they are selling at the moment, but not beyond it. I don't see FII selling forever. I think 2 or 3 months more maximum. That corresponds to something like another 80,000 crore gone in terms of selling from FIIs. But then eventually they would have to come back and buy into an emerging market like India. So emerging market buying should come back by the end of the year or so, if not earlier. Santosh, thanks for your contribution. Holding Sequent and Tasty Bite at 40% loss. I am holding Sequent as well at a 40% loss. And my assessment on Sequent is that next year they should come out with 3 rupees of EPS. The way the management has talked about the numbers for the con call with 150 200 basis points increase in margins going forward. If Turkey holds on, Turkey is the big pain point at the moment with the kind of inflationary pressure that it is seeing, because Turkey has so Sequent has 12% exposure to Turkey. If that subsides, I think things should look up for Sequent. 3 rupees of EPS should corresponds to 200 rupee target by next year. So hold on to your stock. Hopefully we will get out of it in profits in a year's time. In terms of Tasty Bite, what I can say is that most of the high flying, high you can PE stocks have got absolutely hammered. Tasty Bite is no exception. I feel that what you need to do is hold on to it as well. What you need to do is wait for a market rally in mid and small cap, which should come by the end of the year. By from some rally should come in July, and most of it from October to March. And by February March, if you get good exit in profits, exit the stock. That would be my understanding on the stock. All right. So these were the five major points. FIA selling, I believe, should subside in the next uh 3 4 months or so. Just to recap on the 5 points, inflation, in my opinion, is topping out. This is one thing. That is a kind of a scenario that is now thing of the past. I think the market should have priced in by now, because with a 10 rupee cut on oil prices, I think things should look up for stocks, for companies from the September quarter straight away after June. Crude, I think it may head higher, but I think by September quarter it should also peak out, unless the war really escalates or something happens globally. I think crude should top out around 130 to $135 per barrel. There have been talk of $200 per barrel earlier, but I think around 135 it should top out in the next 3 4 months. On the same front, the dollar index or the dollar rupee equation should stabilize by then. We could go to 78, 79, but hopefully between 78 and 79 it should hold. If it goes beyond 79, 80, then we are headed much higher. Beyond 80, say if the dollar goes, or $1 is beyond 80 rupees, then we could be in a scenario where the market could head 1,000 points lower than 15,700. We could be headed towards 14,700. Central bank hiking rates, if the rate hikes are smooth, then there's no issue. I don't think we could cut 15,700. But if rate hikes are very sharp very quickly, which could happen in Europe, European Central Bank have not really moved at the moment. I think if things get bad on that front, then only we can fall. Otherwise, some rate hikes are already priced in. In fact, for the next 15 18 months, if rates keep on getting higher, I think it is priced in into the market sentiment. Now, FII outflow, it needs to stop, because if it doesn't stop, then overall we could be in a scenario where we could be facing a lot of trouble if the DII stop buying, or the uh, retailer starts selling the stocks. Then we could head towards 12,000. So hopefully over the next 2 3 months it should subside. If it doesn't, again, if there is relentless selling for one more year by FIIs, then we could be looking at 14,700 on the Nifty pretty quickly. So this is the overall scenario that I feel hinges on for we as investors in this market. Hopefully things should look better from here on in. So I'm ready to answer your queries. Kindly use the super chat and super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. I think Newgen software, I'm not very positive. The numbers have been up and down, sometimes good, sometimes bad. I think you should look at larger IT companies LTI is good. Larsen and Toubro Infotech. You have Tata Elxsi on declines around 7,000. It looks good. And other kind of companies, there are plenty in the mid and small cap that one can probably look at. Okay. So Philips Carbon Black or any of that companies, I mean that sort of companies, I would say avoid. Look at companies that have fallen over the last 6 8 months and are attractively priced, where numbers are going to come in better going forward. I think some consumer companies, consumer oriented companies in the mid and small cap section of the market have come down 40 50%, and their you can say numbers have been good. Some IT companies where the stock has fallen 50% from the highs, their numbers have been pretty good. They should not have been smashed the way they have been. So I think you should look at those sectors. See, Lal Path Labs on short term is very weak. Avoid the stock, only buy above 3,000. On long term basis, these are good levels to probably add and hold from a 4 5 year point of view. It's a risky buy because of the kind of scenario we are seeing in the diagnostic space with the new player coming in. So put 3 4% of your total holding and hold the stock over 3 4 years. Valuations are attractive. Kaplan Point has produced decent numbers, but there are better pharma companies in the larger space that one can look at rather than Kaplan. Probably Divi's, Dr. Reddy's. These are good companies to look at. Lawrence at current levels look good. So that's the point. Okay. Aztec Life is also a good company. I mean, numbers have been decent over the years. One can accumulate from a 5 year perspective, not as a trade. See, these kind of stocks should be accumulated as an investment from a long term point of view. So Reliance Power and the power sector, see, when everything goes up, when there is high risk trade, or people want to buy big and there is a momentum going on in the market, a bull market sort of a scenario going on, that's when you look at companies like Tata Power, etc. Do not look at Reliance Power. Do not look at the ADAG group stocks or anything. If you have it, exit. Whatever you're getting, just take that. Otherwise, in the power sector, probably Bharat Bijli, to an extent, Torrent Power and Tata Power are the major companies to look at. I won't suggest that you buy into IRCTC from a 20-year perspective. The reason is, uh, government is the major stakeholder, and government could change norms very quickly. Government could, like they did, that they could want a larger share of the profits and all. So things could be extremely up and down. Yes, dividends would be there, but it's a lot of risk buying into a government company from that perspective, from a such long term. Okay. Bharti Airtel is good. I think Bharti Airtel is headed towards 900 over a 2 year period or so. I think there could be a good 40 50% upside. Geojit Financial, most of the finance companies is an avoid for me because I don't think financials should do well in a higher interest rate environment. So that's the call. I think KPIT about a week ago looked very attractive. Now LTTS look good. I think KPIT around 480, 470 were looking very good. So that's a call. Again, a disclaimer, I have the stock in my portfolio. I won't say you get into a Amara Raja batteries. Probably you look at auto ancillary companies which are producing very decent numbers, or look at companies which are pure auto companies, because I think autos should have a very good 2023. It has been 4 5 years of complete downturn for the auto industry. I think things should turn around once inflationary pressure reduce. Rajratan Global is a good stock from a long term point of view, but again, put less than 5% into such stocks. It's a very small cap company. So that's why. Cosmo Films, I don't track that much. Tanla platform look good right now. Any tips to a 1320, 1330 can be bought. Whatever correction that I used to talk about in Tanla from 2100 levels is probably is done. The kind of numbers it's producing is good. From a short term point of view, you can buy for a target of 1700, 1750, and a stop loss of 1300. That's the only call I can give. Long term, I'm not that positive on the stock. All right. Power grid is good to get consistent returns and dividend. Yes, you can buy, but don't expect a lot of things from power grid over long term as well. So Borosil Renewables have come out with very decent number. It has corrected from the top. I think one can start accumulating, but wait for major declines to buy big rather than at this point of time when the stocks have gone up. HAL again, a very good company in the defense space. I think defense should do well at least for the next couple of years. So hopefully, from a 2 years perspective, one can buy into Hindustan Aeronautics. I think Mirza International is a good stock from a long term point of view. You can put less than 5% in it. Uh, the promoters have bought, so the management is buying at lower levels 120, 130, 140. So I think looks good from a long term point of view, 3 years plus. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.